What's up, everyone? All right, I hope you guys are having a great weekend. We're going to sit down here and do a little bit of prep for the week ahead and come up with something of a game plan. If we look at the scans here, I'm going to go over some of the stocks that were hot last week that I'm going to have on watch. And we'll also just kind of take a look at my P&L for the last 60 days here. Certainly, things started to pull away pretty quickly right in this stretch. So the market is definitely heating up. There's no question about that. We're in a bull market right now. And that's reflected certainly in the S&P 500, which I'll make full screen here. So we'll switch to the daily chart. We'll do one here. So S&P 500, new high on Friday, all-time highs. All right, now I look at the S&P 500 as a gauge of overall market sentiment. How strong or weak is big picture the stock market right now? To zoom in a little bit more, we could look at the IWM, which is the Russell index. The only problem with looking too closely at the IWM is that there have certainly been times where the IWM has been more or less sideways, and I've had fantastic trading. But it's worth taking a peek at. So right now the IWM is starting to break out of this resistance that it's had on the daily chart, right at about like 200 kind of ish. So you can see we sort of have this flat top of resistance in this area and starting to break out of that. So if we can break out of that on the IWM, then next levels to watch would be 212. And then we start making our way up towards this pivot here at 227. And then all-time highs up here at 244. So a little ways away for sure. But, that's kind of the big picture. And I think as long as the overall market keeps moving higher, the IWM will probably rise as well. Rising tide lifts all ships. Okay, so that's big picture of the overall market. Now, as we look at the stocks from last week, and even when we just look at Friday, ADIL, I'll just type it in here. ADIL was I thought it was the best move on Friday in a way. I mean, there were a couple others that were decent, but we'll switch this to the daily chart, the intraday. So ADIL, we got this squeeze here from $3 all the way up to $4.20. That was a nice move, and it was on some pretty solid volume. So the volume on this one was really good. And let's take note of the float, 959,000 share float. So in this market right now, we have a lot of stocks that have been really beaten up. They've been beaten up from, a couple years of being in, what has been a bear market. And we're just now starting to come out of that. So, in the last few months. So the result is that you have a lot of stocks like ADIL that, as a result, typically of reverse splits, have gotten the float super, super low in order to keep the stock above the minimum of $1 a share. For those that aren't super familiar with how this works, I'll just jump on the whiteboard here for a second. Move these. Let's see. I was working on my my audiobook here yesterday and this morning, and the rattling of my bracelet was too much background noise. So anyway, these stocks sell off. And if they go below $1 a share, they're no longer in compliance with the listing requirements. Listing requirements for NYSE and NASDAQ are to keep your stock above $1 a share. So they do a reverse split. So if it's a 10 million share float and they do a 20-to-1 reverse split, on the next day, the 10-cent stock is going to be trading up at $2 a share, and the float goes from 10 million shares to 500,000. That's how the float becomes that low. So now you have a stock at $2. If it goes down again, unless they do a secondary offering to sell more shares, if they do another reverse split, the float's going even lower than that. So that's what we've seen a lot of in the last year. The last couple of years, stocks that have been selling off because of the bear market. And the bear market hits the small cap stocks the worst because they're the companies that need to be borrowing money in order to keep growing. Now the interest rates are so high, they can't afford to borrow. And, the result is they decline in price, and investors don't have the risk appetite to be buying a lot of those stocks. So ADIL is one that has gotten itself to a position of a very low float. There's a reverse split there, and I'm sure there's been some others. So that's ADIL, which is just sort of the latest example. But the thing to note is that it didn't really make sense for this chart to break out here, at least in my opinion. I was really surprised that it pulled back and then popped up, because there wasn't a fundamental catalyst for this move, but nonetheless, it did. And so I think one of the reasons is because the stock has such a low float, that probably some short sellers got a little overconfident, and then some buyers, for whatever reason, decide to jump in it. And next thing you know, shorts are covering, the stock's up 30%. Now it's one of the leading gappers on the morning, and people are paying attention. And just like that, even though it doesn't have a fundamental catalyst, it's starting to become obvious. So I'm always asking myself the question of, is this the obvious stock today? And if it's not, I probably don't want to trade it. But if it is, then I'm going to be aggressive. So ADIL, and let's pull up the continuation scan. So ADIL, I'm not looking at that for continuation on Monday, but it's just worth noting. JL, this one, Chinese stock, sold off from $28 to $2.31. This is that typical, Chinese dumpster fire where they just start unloading and the stock just drops and drops and drops. And I actually really appreciated Danny in the chat room, who's one of my students, and he's been doing a really great job. He teaches mentor sessions, and he's got a mini class that we've added to our curriculum, teaching his variation of my strategy. And one of the things that he said on Thursday when this was selling off, and this was when it was at about like $10, and some people were watching it for a bounce. Actually, it was at 12. And he said, guys, think about it. It's a Chinese stock. Just because it's down $10 a share, why would it bounce? Is it really a good company? Is it really something anyone wants to buy? The party's over. People are going to sell it, and this might be one of those days it drops 80%, 90%. And I appreciated that sort of voice of reason, because I was starting to look at it thinking, whoa, look at that drop from 30 to 12. This could give us a bounce. But, you've got to really be careful with these. So anyway, so that was JL. Big range, but definitely not going to trade that. No interest in that stuff. HOLO, similarly put in a crazy move. This was the beginning of this hot streak, but has now come back at $9. Some people were trading it last week, and I was looking at it and thinking, guys, it's below the 200 moving average. It's below the 9 and the 20. I don't think this is something we should mess around with. IFBD is showing a 250,000 share float, so this one is ridiculously low, but it's sold off too much. It's on the backside of the move. This one completely got demolished. And I don't think it's a Chinese stock, but this one really got demolished. People just started selling it hard, from $9 to $1 in one day. That was crazy. CPOP, another lower price stock, I suppose, low float, 1 million shares. This one went up to 10 and then came back down. VANI, this is another one that gave us a pretty nice move. So this one went all the way up to 8. And this one I would say I might consider for a bounce, because this one, if we get a first daily candle to make a new high, it's still worth considering. Again, I don't love this setup, but it is something I would consider. So we'll see if we get a first candle that makes a new high on that. That would be on the daily chart. Yesterday's high was 347, so I would look for a break over that level. Jan X, this one's higher price and it's easy to borrow. Even though I made some good money on it this week, I don't think I'll go back to that one. I think I would leave that one alone. If we just look at float, looking at some of the lowest float stocks in the last week that have had some big range, VLCN is a little too cheap. Bets, I don't like that one. Bit Brother. IFBD, SPRC, that one had a headline the other day and popped up, but unfortunately this one has a history of popping and dropping, so I don't trust it anymore. MOTS, MOTS, 500,000 share float, But this isn't a scan of all the stocks with low floats. This is just a scan of the stocks with low floats that have also had a big range in the last 2 weeks. There's a ton of other stocks that have very low floats, but I wouldn't necessarily look at them because if they don't have news, they're not doing anything. So my strategy each morning in terms of finding stocks to trade is just using the gap scanner here. So I'm just going to move this here. So this is actually my top gainers scanner. And what I like about this is it's just showing me all the top gainers in the market over 50 cents a share. And I could see the red or green arrows as a stock is moving up the scan or down the scan. So sometimes I'll be sitting here at 7 a.m. or 7:38 when we have news coming out, and I'll see a stock down here at 21% with light volume, but it starts moving up, and that's 31% and 40%, and it's starting to move up the scan. So as I see it moving up the scan, I'm thinking, all right, I better take a look at this. It's not the leading gapper yet, but it's moving up. Let's see what this thing is all about. I check the news, and then I start dialing in on the chart and asking myself, can I jump in on this? We're in a market right now where there is quite a bit of emotion. There's some FOMO, some fear, some greed. Traders are wanting to capitalize on the window of opportunity that we have. And so my thought is that when I see a stock popping up, I want to try to jump on and participate in the move. So if we jump back over to the whiteboard here, I'll just move my microphone a little bit. When one of the things that I've been noticing is, we'll have these stocks that initially hit the scans and they pop up right away. So like basically news comes out here and they pop up, instantly. It's a big green candle. But this is usually what we call the algo. I'll try to write normally here. The algo spike. So algo spike means high frequency trading algorithms saw the news headline because they subscribe to news and real-time market data feeds and executed orders immediately. Now, one of two things is going to happen. It's certainly possible that immediately gets reversed as some retail traders short the stock and other retail traders just take profit. So sometimes we have that full round trip. We call that a round trip. So it goes up and then back down. And then the alternative is that we have that first pop. It pops up just a little bit, but it doesn't die. And then this is where I'm looking to get in. And this micro pullback here can occur on the 10-second chart, which means this is 30, 40 seconds in. 40 seconds into the move, we don't even have a 1-minute candle that's closed. So the 1-minute candle, right, if that's a 10-second chart right there, then the 1-minute chart would look like basically just one green candle, right? Especially if it closes up here like that. So just one big green candle like that. And you might think, Ross, I don't understand why you bought, right here in that candle. But the reason is because I had a micro pullback. And one of the things that I'm also going to look at is the position of half dollars and whole dollars. So as it's squeezing up, I may also say, you know what, this is $7. I'm going to go ahead and buy a starter position of 1,000 or 2,000 shares at 7 with a stop. Hard stop is $6.50, 50 cents away, because these are the support and resistance levels that we're trading within, half dollars and whole dollars. So hard stop is $6.50. So if I take 1,000 shares, I'm risking $500. Now, if this is one of those stocks that goes straight to 8, that's still a 2-to-1 profit loss ratio. And I don't know how high it's going to go. If it pops right up to 750 and I'm up $500, and then it pulls back for a minute at 750, I'll do this in green, but a pullback, of course, would be a red candle. Then I could be adding another 1,000 or 2,000 shares for the break of 750 for the move up to 8. And next thing you know, I'm in at a 725 average, and it goes up to 825. It's $1 a share. And if I'm not willing to jump in early here, then I may not feel comfortable even breaking the ice this high up, because at that point, we'll just have like 2 big green candles in a row. So to try to get myself comfortable, breaking the ice, getting myself in a position, right now is a market where I'm jumping faster, and then I'm asking questions later. So if the stock is hitting my scan and it's moving up, I'm interested. Now, I had a trade I took last week where the stock starts popping up, I jump in, and I make a little bit of money on the trade, and then I look at the headline. I saw there was a headline, but I didn't read it. I just saw, oh, there's a headline that came out, and then it's not like it takes that long to read it, but I was just so focused on the time and sales and the level 2 that I didn't have a chance to read it. So then I get a moment to pause and read it, and I'm like, whoa, wait a second. This headline has to do with weight loss. And that big move we had on VANI, where it went up, 800% or whatever it was, and that big move we had on VKTX, those were both related to weight loss drugs. So, Ozempic, there's sort of all this rage about weight loss drugs. And so I'm like, okay, here we go. This stock has a weight loss catalyst. I think I need to be probably pretty aggressive on it. So then, I stepped up to the plate and got aggressive. But there's only so much you can review in the moment before taking a trade. And to be honest, I should try to read the headline a little bit more closely. But at the same time, if the stock is moving up, then the headline's being received well. It's only in sort of certain markets where the subject of the headline becomes significant. During COVID, subjects that involved COVID and, vaccines or disinfectants, whatever, became those types of headlines worked well. During, we've had different phases or different sort of cycles, news cycles, where certain types of headlines just perform better than others. But right now we're in a cycle where weight loss headlines are performing pretty well. So, certainly on Monday or Tuesday or anytime next week, if we see a stock certainly that has a lower float, under 1 million shares or under 10 million, and it has a catalyst that has weight loss in it, I'll pay extra close attention to that. And it doesn't guarantee that we'll have a move like VANI, but I'm sure other traders are thinking the same thing. So that's kind of that FOMO in the market. Maybe I didn't trade VANI as well as I could have. So the next one that comes out with the weight loss catalyst, I'm going to try to do even better on. And you multiply that psychology by, all the traders in the market, and that's where that market sentiment comes from. So right now we've got a real shift in market sentiment that's, to the buy side. And I will say last week, we definitely saw a fair share of round trips. We saw stocks that popped up and came all the way back down. So I don't want to overstay my welcome. I'm not buying these stocks and holding them overnight thinking they'll be the next HOLO, HOLO, that goes to like $100 a share. I'm still just trading them, and that's the right move. But in the first leg of the move, when something starts to pull away and we have that exuberance and the volume is coming in, we've got the high relative volume, that's when I'm going to try, to lean in and be aggressive. And, my metrics are telling me that this is working. So I'm going to definitely keep it up. I do want to increase my share size a little bit. I've been thinking about that as sort of a conscientious effort to try to push my share size a little bit higher. As always, and I talked about this the other day, my goal each day first is to build a cushion, and then from that cushion kind of scale in. But I think I need to start trading with slightly bigger size because we are seeing some nice moves, and I feel like I'm leaving maybe a little too much profit on the table. So that's my plan, for the week ahead right now, is to size up a little bit, but also, look, every single day when I sit down, I'm going to trade the market I'm in. If it's not a market to trade with big size, then I won't. But if we keep seeing these outsized moves and 200, 300% squeezes, I'm going to try to make as much as I can on it because, we'll certainly at some point have a period where things slow down and I've got to be a little bit more patient. But right now, it feels like it's been paying off, jumping in pretty quickly and being aggressive and buying dips when it's still on the front side of the move. But once we switch to the backside and it starts to, we're below MACDs against the trade, we're sort of below our moving averages, then I got to sort of ease off the throttle and cool down. So anyways, that's the game plan for tomorrow. I'll be back at it streaming bright and early Monday morning. So Warrior members, I'll see you in the morning. And those of you guys tuning in on YouTube, of course, you're welcome, to join us at Warrior Trading if you'd like. But in the meantime, I'll upload my recap tomorrow afternoon. Okay, I hope you guys, again, are having a great weekend. Reminder, as always, my results aren't typical and trading is risky. So manage your risk, take it slow, and I'll see you guys back here first thing tomorrow morning.